And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak to your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the podcast and to the YouTube channel. And if you think somebody may find this of interest, why don't you go ahead and hit the share button? Hit the like button also, right? We already spoke about that. Hit the share button and send it to them as well. So I had a fascinating meeting a few days ago with a client, a new client, who transferred over a substantial amount of money to me. And the couple, were nervous that the markets are high. Now, I really generally don't like to get into conversations of what the level the markets are trading at because people, most of my clients, especially those who are invested in equity stocks, stock ETFs, are in it for the long term. Okay. And whatever happens from today to tomorrow, from today to a month from now, is not really all that important. The issue with this couple is they had done very well in the markets. They had substantial capital gains, and they had not yet retired. They planned on working for another maybe 2 years, and then they were going to hit retirement, and then their plan was obviously to start drawing down investments. Now, they were nervous that if the market drops today by 40 or 50%, that might seriously jeopardize their retirement plan. So what did we do? What did I suggest? We went through everything. And I suggested that they start building their cash reserves, that we figure out a way through all kinds of various Israeli retirement funds they have, their own funds, cash, payments that they're going to be getting, that they stash away maybe 4 or 5 years of living expenses. Now that's living expenses that they're estimating after they get Social Security, Israelis Bituach Lomi, and their Israeli pension. So whatever they need above and beyond that to supplement their income, right, which is going to be coming in consistently, let's stash away 4 to 5 years worth of that so that they don't even have to think, right? If the markets do crash, big deal. They can wait it out, right? They've got plenty of time. Time is on their side, and they don't have to worry about, starting to juggle and realize capital gains or panic that they just lost half of their money and what are they going to do? And they're too young and they're going to live until 100 and 120 and they're going to run out of money. None of that. Peace of mind, right? So that they can just create a system. We used like CDs, but a laddered system so that, estimating that they retire in 2 years, so that in year 3, 4, 5, 6 from now, 7, they have the money that they need. So we really, they don't have to worry about it at all. And I thought that was brilliant. Most of the advice I do think is brilliant, but they liked it also because it gave them peace of mind. It also gave them time to sort of reallocate their portfolios to get it a little bit more in line with what will be their new retirement reality, and that then afterwards they'll be able to set it up in a way that they can generate almost automatically from the portfolio itself. It'll spit out the amount of money that they need, but that it can be done in a work of progress, so that they don't have to. I mean, they could just tomorrow or the day they retire, start selling off large chunks of their portfolio, moving in on a fixed income and do the same thing. The problem with that is that they're going to have to pay literally hundreds of thousands of dollars in tax. So again, I'm not an accountant. You've got to speak to your accountant, and I'm certainly not giving any tax advice here, but capital gains are capital gains. And if they realize them, they're going to have to pay tax on them. That's, you don't need a license for that. To avoid doing that, right? We're able to, and they're making enough money right now that they can stash a little bit away. Plus, they do have income coming in from the portfolio. So let's all that money that's coming in, let's put it away, put it on the side, put it into CDs, government bonds, whatever it is, nothing risky, and that way they'll have the peace of mind to know that as they hit retirement, they don't have to start scrambling. They've got the money there, whatever money they're going to need for the following year, and we sort of, we overestimated right? They want to do some traveling. We added another 2 trips, and we added, helping more children, whatever it is, right? We upped their expenses, what they were estimating they were going to need by an extra 20-25%, just so that they don't really, 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 and include charity in that, so that we really don't have to worry, and they can focus on making that transition, that clean transition to a life of work and working hard in their situation, to a life more of leisure, spending more time with their grandchildren, spending time with each other, right? Traveling and whatever it is, volunteering, whatever they want to do. But the financial side of it takes a back seat. I thought that was very, very important. And they were very appreciative of that fact that they don't have to, until now they were self managing their money. Now, they outsourced that, and we created a plan that they really, really no longer have to be focused on the money aspect of life, because they did a great job, plenty of money, and we're setting it up in a way that they don't have to worry about where they're going to have to draw supplemental income from, because we created a system. It's all about lots of retirement planning, even investing, is creating a system and sticking to that system, or a process, as I like to say, right? Once you follow the process and stick to it, right? Don't veer off. Don't try new things. I heard this, I'm going to do that now. Stick to the process. It's the people who stick to the process, financially for sure, who end up meeting success. It's the people who are like all over the place, right? Oh, that sounds interesting. And then 3 weeks, I write a great article. I'm going to do this. I'm going to do that. And they're all over the place, right? And they don't necessarily have success. They certainly don't have peace of mind. They might have enough money that they can't screw things up at the end of the day, right? But they don't have that same peace of mind that you want to have, right? The last thing you want to do when you enter retirement is like, oh my gosh, now what? Where am I going to take my money from? What am I going to do? All these things. Oh, do I have to sell that? Do I have to should I sell my shares in NVIDIA and recognize a massive capital gain? All these kinds of different things. They don't want to deal with it, right? They just want to finally enjoy themselves in retirement. So that's what we did. We created a plan so they don't have to think about it. And even if they were more worried, not about capital gains, but they were more worried about the market crashing, right? Because the market is high, right? I don't want to get there, right? The market's always high, but we'll leave that for another conversation, right? But what we did is we created a plan that it doesn't matter. Even if the market crashes, they will be good to go, because they've got plenty of runway for things to recover. And that was, that's what we did. And I think it's really, really important to stack cash as we enter retirement. I also think it's important to have cash when we enter retirement. It'd be much more liquid once we retire, because God forbid if our health starts failing or whatever. That's when we need, once we start getting up there, hitting retirement, getting up in that chapter of life, liquidity becomes really, really important, right? Because if something happens and all our money is tied up in real estate or whatever, and we need X amount of money to widen a bathroom or widen a front door to make it wheelchair accessible, we can't start selling off our real estate holdings for that, right? Because we're going to fire sale it, or you can't take a room and use it in lieu of payment. It doesn't work that way. You need to have cash as we age. Cash is definitely king. So when you get to a couple years before retirement, start stashing cash. It'll make life a lot easier for you, and it'll give you that peace of mind that you really, really want to have when you're entering those golden years, the years of retirement. You've been tuning in to the Aaron Katzman Show. We speak to you about your life, money, and your investments. If you like this content, please hit the like button below. If you've not yet done so, you better do it now, right? Please subscribe to both the YouTube channel and to the podcast. And if you think somebody out there might find this of interest, go ahead and hit the share button and share it with them as well. Thanks so much for tuning in, and we'll speak to you soon.